Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, 2018 marked Twitter's first full year of profitability. But the company surprised investors by reporting daily active users for the first time. And the number is smaller than even Snap's. We will hear from CFO Ned Siegel. Plus, we check in with a tech IPO pipeline. Postmates has filed to go public, and the food delivery app could see a sky-high valuation if it gets to market. And GoPro has struggled to attract a wider customer base for its cameras beyond snowboarders and other outdoor enthusiasts, but the last quarter showed a pickup in sales. We'll hear from GoPro CEO Nick Woodman. First to our top story, Twitter gave a lackluster first quarter sales forecast and reported tepid user growth, suggesting that changes to improve the social media platform haven't yet attracted a much wider audience. But the company did start reporting daily active users for the first time at 126 million. It's smaller than some might have thought, but has grown 9% year over year. The company also said it would no longer report the number of monthly active users after the first quarter. Shares plunged after the report. I caught up with Twitter CFO Ned Siegel Thursday and asked what he has to say to investors.
We had a record quarter to finish a record year, the highest revenue Twitter's ever had, the most profits, and the highest level of profitability we've ever had. So we feel great about our momentum going from 2018 into 2019. We're really excited to reaffirm our same priorities that we were executing against last year as we go into 2019, and we're going to just work hard to deliver great outcomes one day at a time.
Now, you made a big disclosure change reporting daily active users for the first time, and you're stopping reporting monthly active users. Why do this now? Why not a few quarters ago?
Sure. Well, this has been a long journey for Twitter, where we started giving monthly active users at the time of the IPO. But gradually there's been a shift inside the company where our priority as a company is really to drive value for people on Twitter every day. The best way to measure that is by monetizable DAU. That's the metric that we've been looking at internally to measure our success for some time. We've given the year-over-year growth rates for it since 2016 publicly, but we want everybody aligned around the same metric that we goal against internally, so there's transparency, so there's alignment, so we're all looking at the same number when we think about how to measure our success.
So you reported 126 million DAUs. Snap, meantime, just reported 186 million DAUs. Facebook, 1.5 billion. So why should advertisers choose Twitter, which appears to be the smallest audience?
Well, advertisers come to Twitter because we have the most valuable audience when they're most receptive. So today's information doesn't change anything for them. They know exactly what they're getting when they come to Twitter with a specific objective in mind, whether they're launching a new movie, a new phone, if they're advertising during the Super Bowl to amplify their message. We had 30 of the 38 Super Bowl advertisers on Twitter on the day of the Super Bowl, amplifying their message because they know that's where their customers were. So this doesn't change anything from an advertiser perspective. We also share a number that's a little different than other companies. Ours is all monetizable daily active users who come to twitter.com or who come to the app. That might be different than how other companies look at it. They might be sharing a family of apps and how many users they have, or they might be sharing users who are on a different part of the service that might not see ads.
But you don't know for sure. How do you know what they're sharing?
I know what we share, and what we share is the number that we're trying to drive. Those are all people on twitter.com. They're all people who are on our app, and that's the number that we're trying to drive, and they can all see ads today.
Have you seen any increase in advertising or influx of advertisers as a result of the scandals and controversies at Facebook?
Well, we think about the things that we can control. And if we look at the last couple of years and the recovery that we've been driving, it feels like so much of it is because of things that we're doing better. The service is much better than it used to be for the people on it, where it's easier to find the things you're looking for, where there's an events and topics infrastructure that allows you to follow things that might have been harder to find before. For advertisers, we're much more clear. They should come to Twitter when they want to launch a new product or service, or when they want to connect with what's happening. I think that clarity has helped us internally. I think it's helped externally a lot as well.
Now, monthly users are declining, and this is the number that you're going to stop reporting. But do you think that the changes that you're making to the platform will increase overall monthly users, or are you really focused on increasing the engagement of the daily users?
We think the changes we're making to the service ought to grow daily usage of Twitter over time. That's going to be the best way to measure our success. We're not trying to get people to come to Twitter monthly. Twitter's a place where news breaks. It's a place where conversations are happening around sports and politics and entertainment and things that people care about. And if you're coming monthly, we're not doing a good job helping you find value in Twitter. So when we're making changes to the service, we're thinking about how we can help people get value from it every day.
So spending is rising 20%. Is this a one-off, or is the cost structure changing for the long term?
Well, we grew expenses 17% last year, but if you look at the fourth quarter, which represents all the hiring we did throughout the year, where headcount grew about 16% over the course of the year, our expenses grew 21% in the fourth quarter. If you annualize that, and you add merit increases and other things on top of it, and new hires as well, because we will continue to hire against the same priorities in 2019, it's pretty easy to get to approximately 20% expense growth, which is what we talked about. So this isn't a change for us. This is a continuation against the same priorities, thinking about health, conversations as a way to drive audience on Twitter, our revenue products and sales, and the platform that we use to deliver Twitter.
Do you see that 20% number staying the same over the next several years, or is that an annual thing?
Well, it's an annual thing for 2019. We'll think about next year, or we'll talk about next year more when we get there. But as we make investments in 2019, we're not just thinking about this year. We're thinking about hiring people who can have impact at Twitter over long periods of time and delivering on our purpose over long periods of time.
So what are the product changes that you are making that you think are going to expand the overall audience?
I'll give you a couple examples. One is one from the fourth quarter, and then there are a couple that are in front of us. In the fourth quarter, we made it easier to switch back and forth between the reverse chronological timeline, so you're just seeing the latest tweets, and one where we use an algorithm to surface the most relevant tweets first. That's about transparency. It's about helping you figure out or decide what you want to see in the moment. We're really proud of the change. We executed on it fast, and
we've seen during the Super Bowl. So
awesome. I love to hear that. I did too. It was a great use case for it, where you really want to know what people are saying exactly in that moment when a field goal is made or missed, or when a critical call has been made. That had a really positive impact that we were really pleased about, not just externally, but internally, because it showed us that we could move fast and we could try things and we could have great outcomes as a result of it. When we look ahead, there are a couple areas that we think about. The first is conversations. We want to make it easier for people to tweet and to be a part of a conversation. And the second is events and topics, because right now you follow people, but you care about a topic or event. That's what brings you to Twitter.
Twitter CFO Ned Siegel there. I want to stick with Twitter's earnings and bring in Bloomberg tech Selena Wang, who, of course, covers Twitter for us. And, Selena, there was something he said there, which is we're not trying to get people to come back to Twitter monthly, which I thought was intriguing since, as recently as a quarter ago, they were. That was the number.
Ever since Twitter's been a public company, investors have been clamoring for them to give this daily active user number. In fact, in 2017, the SEC asked Twitter, why don't you disclose the actual number and just the growth rate? And at the time, Twitter said they didn't want to invite unfair competition and that the growth rate is actually more important than the actual number. But now here we are today, and Twitter is disclosing the actual physical number. And now, undoubtedly, daily active users is a more important metric than monthly active users for advertisers. I mean, if someone is only coming to Twitter once a month, it's not a very valuable user from an advertiser's value proposition. And as Ned Siegel said, daily active users is what the company has been using internally as a metric to drive growth for several years. But it is kind of convenient that they decide to phase out monthly active users right as it's decreasing and daily active users are increasing.
So let's talk about this actual daily active user number. It was smaller than some people thought it might be. We knew it would be a lot smaller than monthly active users, but much smaller than Snap's. How does that compare with what estimates were?
Now, when I talked to analysts, they were expecting it to be less than 50% of MAUs, but it's actually just 39%. So that certainly is less than people had imagined. And it was only 115 a year earlier. So the very positive part of this is that it's growing at almost double-digit rates every year, while Snapchat has been basically flat or declining. But that being said, Snapchat is much larger. It's about 186 million daily active users, and Facebook's is more than 1 billion. Now, Twitter says that they're only calculating monetizable daily active users, which means people that can actually surface ads, so that it's not an exact apples to apples comparison.
Now, there's, Twitter is absolutely an influential platform. The president is tweeting there every day, and you don't see the same thing with Snap. So how do advertisers view, let's say, Snap versus Twitter?
They're certainly very different platforms. I mean, Twitter is a place to see what's happening now, to launch a new product, or a new movie, or to drive engagement towards an app. Whereas Snapchat is really about that person-to-person, friend-to-friend engagement, and the demographics are quite different as well. Snapchat tends to skew much younger, and as you said, Twitter is an incredibly influential platform. There are tons of news outlets every day, and on television networks like our own, and on message to message, where tweets are being shared, but they're not counting that into the MDAU number. So the overall influence is actually larger than what that number shows.
All right, Bloomberg Tech, Selena Wang, breaking it down for us. Thank you so much. Okay, coming up, self-driving car startup Aurora just got a boost of confidence from Amazon. How the company is using its latest funding to support a range of car makers. That's next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Amazon is hitting the gas on self-driving cars. The e-commerce giant announced an investment in the autonomous technology startup Aurora Innovation as part of the company's $530 million Series B funding round. Founded a few years ago, Aurora works with automakers to design and develop sensors, software, and data services needed to deploy autonomous cars. The funding round, led by Sequoia Capital, values the company at more than $2.5 billion. Joining us to discuss, CEO and co-founder Chris Urmson, who also ran Google's self-driving car unit for a time. Chris, great to have you back here on the show.
Oh, thanks so much for having me.
So Amazon, that was a surprise. That piqued our interest. Why is Amazon getting into self-driving cars?
Well, you have to ask them that. But from our perspective, it's amazing to have a great partner, right? This is a company that is a technology giant, and they're a massive logistics company. So we're just excited to have them as a partner, and we'll see if we can make them a customer at some point.
So how did the conversations play out then, from what you can tell us from your side? How do you see this being integrated into Amazon someday, perhaps?
Well, I guess I can't really speak to Amazon, but let me think about how we think about it. So at Aurora, we're building a driver. And that driver, we think, can move people, and ultimately will move goods as well. And we look at Amazon and see this incredible logistics company, and we look at an opportunity to help them with that over time. So
potentially self-driving Amazon cars bringing packages to our doors?
I think delivering goods, for sure, yeah.
So talk to us about where Aurora is now, because you make hardware, you make software, yeah. It's in Volkswagen, it's in Hyundai, it's a sort of stack, if you will. What does that technology do? So we're building a driver, and the idea is you should be able to get in your car and sit back, read a book, or have a nap, and get from A to B. We've been at it for about 2 years now. And we've got this great group of people who've joined us. So we're about 200 people now, and it's just exciting to see the progress we're making on the software. So for the technology that exists today, or is out on the roads today, is that driving these cars for them? We're still developing it. So we don't have a product that yet we ship to customers, but our test team is out on the roads. We've got vehicles on the roads in California and Pennsylvania as well. So when you say driver, this is a fundamentally different approach than, for example, Google has taken or Tesla has taken, right? Well, I think it's probably similar to the way that Google's approaching it. So they're building a driver, and they're integrating that. They're buying vehicles from people and then doing what they're going to do with it. Our model was do the thing we can be best in world at, and we think that is building that driving capability. And then we go and work with companies like Volkswagen and Hyundai, and ultimately with other companies in the transportation sector. And what we're really excited about, though, is that we're actually an independent player. And so, people that are working with us have confidence that we're going to be supporting them and their interests. So what do you make of what's happening in the sort of broader industry? Of course, what's happening at Google, Tesla, and you see all these other traditional automakers trying to get into self-driving cars. In some ways, it's moved quickly. In other ways, it's moved way more slowly than some might expect. Sure. Like I went in the Google self-driving car in 2011. Yep. Haven't had a chance to do that again.
Sure. No, I think what we're seeing is this technology that has this incredible opportunity to save lives and make the roads more efficient and make it less expensive and more accessible to get around. And like anything that's going to be transformational, it takes a while. So it's a new technology, and it's bridging between two industries, between the technology industry and the automotive industry. And anytime you have that level of complexity, it takes a while to figure it out.
So who do you think the winners are and who do you think the losers are going to be? It's not a zero-sum game. But
well, I think obviously Aurora is going to be one of the winners. But we look at it and we see this incredible greenfield, right? There's this amazing opportunity to go and take the next step in democratizing transportation. And we're going to be there with our partners, and we think there's lots of room for others to play too.
What are the technical challenges that you continue to work through? I mean, there are some really deeply moral and ethical issues that you have to work through when you're building a self-driving car.
Yeah.
Which way does it go if it sees, a person on the road this way or a person on the road that way?
So I think the heart of it is really anticipating what others are going to drive on the road. So our vehicles today do a good job of seeing other people, whether it's a pedestrian or a cyclist or other car. And then it's, what are they about to do next? Are they about to step in the road? Is that vehicle about to make a lane change in front of us? And if you can do that well, then you become what we talk about as a human, a defensive driver. And then you avoid these kind of catch-22 situations.
How can a car know what another car is going to do if there aren't necessarily signals? Like maybe they didn't use a blinker.
Yeah,
maybe they didn't made a last-minute decision.
Yeah, I think that's part of the challenge. And there are subtle cues. So, as a car is driving along, even if it doesn't turn on the turn signal, if it starts to drift in the lane, it might be about to make a lane change. If you're approaching an intersection, it might be that some car wants to make a move over, and that's part of the magic, I guess, of this technology, is getting to the point where we're picking up those subtle cues in the software and then reacting to them safely.
So what are the car makers saying to you? I mean, these are your partners and potential partners.
Well, they're recognizing that this is an important technology, right? They see this as part of their future, that for many of them, they're going to move from being car makers to people or companies that provide mobility. And the key ingredient to that is having a driver in their system, and that's what Aurora brings to them.
So $500 million is a lot of money. How do you plan to spend that?
Yeah, no, we're really excited, right? That's an incredible vote of confidence for us as a young company. And the folks we have around the table with Sequoia and Amazon and T. Rowe Price, it's great. And we're going to spend it on building great, hiring great people and bringing it in, right? This is a big problem, and we need lots of people, and that'll be a big part of it.
All right. Chris Urmson, CEO and co-founder of Aurora. Good to have you back here on the show. Congrats.
Thanks so much.
Coming up, competition in food delivery is getting more cutthroat as Postmates looks to go public. What does it mean for competitors like DoorDash and Grubhub and more Uber Eats? That is next. And we are live streaming on Twitter. Check us out at Technology and follow our global breaking news network TikTok on Twitter. This is Bloomberg. Another tech unicorn is heading to the public markets. Food delivery service Postmates is said to have filed for an IPO Thursday, joining a slew of other companies, including Uber and Lyft, looking to list this year. The offering could value the company more than $1.8 billion. Bloomberg's Olivia Zaleski here with more. So Postmates, the latest one to pull the trigger.
The latest one to go. Yeah, we reported today that they have filed. We understand that they are seeking a valuation of $1.85 billion or higher. I'm sure they're hoping for much higher. Really interesting company. I think a lot of people don't realize that Postmates was actually the pioneer of the on-demand food delivery business. You have Grubhub that existed before. But they were really a website that sort of used restaurants that had their own delivery people. And Postmates brought in this gig economy model that's popular with Uber and Lyft, and essentially matched that with restaurants that couldn't afford their own delivery people. And they made that business happen. And then you have all these follow-on competitors that have come out of the woodwork since they built their business, like DoorDash and Uber Eats. They're sort of following that model that is wildly popular but still not profitable.
Now, Postmates is, of course, there's a lot of competition, as you mentioned. One of the things, as a customer, occasionally, I find that their fees are higher and that they're less transparent about, where that money is going. And maybe,
You know, you're not the first person to mention this to me, and I haven't done a study on it either. I actually really don't know where their fees fall compared to the other companies, but I think that Postmates is extremely popular. It is the leader in LA, in the LA market, and it tends to have, I would think, like a slightly wealthier clientele. It's very popular with celebrities, and a lot of their brands are sort of exclusive, high-end organic brands that they build these exclusive relationships. So it's very possible that their fees could be higher than the others. And DoorDash has sort of built its brand more on doing delivery for, you know, the Cheesecake Factory. Uber Eats has an exclusive deal with McDonald's. So, you know, each of these food delivery brands has its own niche, its own focus. And I think Postmates has clearly gone after sort of a slightly ritzier crowd.
Now, what advantage does an IPO give to Postmates as Uber is doing it, and Uber Eats is a huge and growing part of Uber's business?
Well, certainly liquidity, you know, that's important for all their early employees and their investors. People want to make money eventually, so it does that. Postmates just raised a whole bunch of money. It raised $100 million recently, and right before that, about $300 million. So it's not like it doesn't have cash. It certainly does, but I think the timing is really good. You know, the IPO market is hot right now. It's keeping me really busy in my new role, and you know, I think they sort of saw that this was a great window. I think they're one to watch. You never know. Maybe another larger company would want to acquire them. That could also happen too.
Now, Uber has been, you know, very straight up. They're experimenting with groceries. Is Postmates looking to expand beyond food delivery?
Absolutely. So they
like
already
restaurant-delivered meals, things like that.
Yeah. So I mean, they do. Is Postmates doing that, or is Uber Eats? So Postmates is already doing grocery delivery, and they have a deal with Walmart where they will deliver their groceries as well. They also, a lot of people don't realize this, but they're the delivery partner for Apple and like tech brands, and they will just quietly deliver. If you need a laptop last minute and yours crashes, they'll be on the back end of that in the sort of white glove delivery option that they provide. So, you know, I think they're experimenting with lots of things, but certainly restaurant delivery is their sweet spot and the majority of their market.
All right, Olivia Zaleski, our deals reporter, bringing us another scoop. Thank you so much. Coming up, IMAX may be bracing for a down fourth quarter, but one place embracing its giant screens is China. We'll discuss next. And later in the show, Seattle and San Francisco, two tech hubs that brought us jobs, but two cities also facing huge housing shortages. We will speak to the former governor of Washington about how big tech is trying to remedy the problem critics say it created. This is Bloomberg. This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Emily Chang in San Francisco with Heidi Stroud-Watts in Sydney and Cherry An in New York. Let's take a look at the top global tech stories of the day. Heidi.
Emily, Sherry, looks like the changes that Twitter has made to its platform aren't attracting a wider audience. Despite Twitter's daily users rising 9% to 126 million in the fourth quarter, the social media company also reported a decline in monthly active users. That number was down 9 million from the same period last year. Twitter also revealed it will no longer report monthly active users going forward. Amazon has cut a deal to return thousands of suspended products sold by Cloudtail to its Indian site. But to do so, it had to sell much of its stake in Cloudtail. Those products were delisted on the first of the month following a new e-commerce law. Together, those two companies account for 70% of India's entire online retail market. Canadian telecom company BCE has said a possible Canadian ban on Huawei equipment won't delay its 5G rollout. BCE added that a ban won't hinder its capital expansion plans either. Canadian Prime Minister Justin Trudeau is currently weighing a ban on using Huawei gear in Canada's 5G networks. And those are the top global tech stories today. Sherry.
Heidi, thank you. Later this month, IMAX will release its fourth quarter numbers, and with it, With its global box office slipping 15%, one place it held strong was Greater China, where receipts jumped by 10%. The company is hoping that 2019 will be a box office breakthrough with plenty of blockbusters from the likes of Marvel Studios and the latest Star Wars installment. Earlier, Bloomberg BNN's Amanda Lang and I caught up with IMAX CEO Rich Gelfond to get his thoughts on the year ahead, both in the U.S. and China.
We always say we're not a quarter horse. We're in it for the long run and for the year. And as a matter of fact, we disclosed our box office for the fourth quarter, and it was quite strong. Of course, you're right, it didn't live up to the year before because there was no Star Wars, but Aquaman was a huge blowout success, and many of the films did very well in China. So I think most analysts would say our quarter did better from a box office point of view than they expected, and will report. Of course, this year it's a little bit of an embarrassment of riches because in the first quarter you have a lot of terrific films. Alita Battle Angel is coming out, and then of course Captain Marvel. Then later in the year you go into Lion King. The next Star Wars is in the fourth quarter this year. It's a really good year that's spread across. So although sometimes it happens, I don't think this year will be one of those years.
Rich, to your point that China has been doing well, we have seen the pace of growth in Chinese box office sales, though, slowing down. So how do you plan to deal with that?
Well, you know, it's a great time to ask that question because it's Chinese New Year the last few days. And in fact, Chinese New Year accounts for a fairly significant portion of the year's box office. And for the first 3 days of Chinese New Year, we're up 20% over where we were last year. And last year, we were up 75% over the year before. I think the market itself is kind of flat over Chinese New Year. But I think, again, for premium entertainment, a special experience, a way to see the movies, you know, we're doing extremely well in China.
And you have deep business ties there, Rich. I'm curious for your sense on the ground of the Chinese business community's view of partnerships with the U.S. and American companies right now.
So I was in China about 6 weeks ago. I think, you know, the business people I met are really anxious to reach some kind of a compromise with the United States. And as a matter of fact, you know, they had an interesting comment almost across the board, was they were speaking different languages, not only Chinese and English, but the different languages being they wanted to talk business language, which the U.S. was, and the government was more caught up in government kind of policy language. So in the business community, I think there's a lot of support. A lot of the sectors in China, as you guys have been talking about, have been suffering, and some of the things like auto and steel and the bigger areas. But consumer discretionary and, you know, again, the business we're in, the movie business, IMAX business, premium entertainment, that's held up pretty well. So I think it may be more the export part of the economy that's suffering than the internal consumption part of the economy.
And Rich, Netflix has started to make some noise in the movie business. Of course, we have seen its Bird Box success. Is there any chance that you could be partnering up with them in the future for event films?
Well, I think one of the great things about IMAX is that we eventicize films, and as good a film as Roma was, I think it suffered a little bit from the fact that it wasn't an event through big movie premieres and a lot of press and a lot of the red carpet. And with the Academy Awards coming up, we'll see how that affects people's perceptions of the movies. So we've talked to Netflix many times about doing things with them because we're a great platform to do that. But for now, at least, Netflix wants day and date with theatrical and with streaming. And we're committed to working with our exhibitor partners worldwide in preserving the windows as they exist today. Places like Amazon are respecting the windows. Places like Apple haven't announced their position. So I'd love to work with Netflix, but I think they need to show some flexibility on the windows.
That was our interview with IMAX CEO Rich Gelfond. And Emily, really interesting to hear from the CEO talk about the Chinese markets and how consumption remains quite strong. And really worth pointing out that in the Chinese New Year, the first day of the Chinese New Year, already China broke their single-day box office record, raking in more than $213 million in a single day.
The Chinese market, certainly a big ticket for Hollywood. I don't want to date myself, but I think it's been a couple of decades since I've been to an IMAX movie, but The Lion King might be enough to get me to go back.
Yeah, I mean, these days I watch movies through streaming, right? I mean, you can get it in your house, basically. So he also talked about Netflix, of course, and wanting to do some sort of partnership with them. But worth noting that it's the same issue in Asia as well. You see IMAX really having great business in India and Japan, but the challenges posed by streaming are still there.
I'm with you, Sherry. I don't leave my couch, and that's how I like it. Thank you so much for that interview. We will have much more ahead, so stick with us. This is Bloomberg. Antitrust authorities in Germany have ordered Facebook to change the way it combines user data. The 3-year investigation looked into how Facebook scoops up consumer data and whether it uses its market power to make users give up their information. Facebook says it will appeal. Well, last month, Microsoft announced a $500 million initiative to tackle Seattle's growing housing crisis. Since 2011, home prices in the area have grown faster than the median household income, and this isn't just a problem in Seattle, of course. Another high-tech hub is facing a similar issue. Just a week after Microsoft's announcement, the philanthropy started by Facebook CEO Mark Zuckerberg and his wife Priscilla Chan said it was backing a $500 million effort for affordable housing in the San Francisco Bay Area. Joining us to discuss from Seattle, the former governor of the state of Washington, Christine Gregoire. She is now the CEO of Challenge Seattle, an alliance of executives from the region's prominent businesses and philanthropies, including Microsoft and Amazon, that address the area's housing troubles. So, Governor, thank you so much for joining us. How did you get Microsoft to focus this much money on housing?
You know, we, all of the CEOs had a meeting and we talked about the amazing success that we've had economically, but really some of the challenges that had come about as a result of that, and really talked about housing affordability was at the top. And so they began the process of asking how could they help, and really stepped up and said, we're going to invest big time. We're going to philanthropically give some money to homelessness, $25 million, $250 million for low income, and importantly, for the first time ever, $225 million for middle income housing, because with the growth and the high cost of housing as a result of the growth, we have seen the affordability of middle-income housing just diminish dramatically, so that we're pushing all of our middle-income families out of the region.
Now, I recently sat down with Priscilla Chan to talk about the Chan-Zuckerberg's big backing of another $500 million housing initiative here in San Francisco. Facebook is part of that. Genentech is part of that. And I asked why more companies seem to be wising up to their role in this issue. Take a listen to what she had to say.
This is a problem that exists that impacts the greater community, and they want to be able to be part of building the Seattle or the Bay Area into this place that people from all different backgrounds can come and be successful. And it's also understanding that looking at opportunities like the partnership where they can be part of being a durable solution.
Now, one of the things she also mentioned was that this is a talent issue. It's difficult for companies like Facebook to recruit to this area because it is so expensive, even for people making very competitive tech salaries. Why do you think companies like Microsoft and Amazon are on board? What's in it for them?
Well, I think what's in it for them is not only their ability to recruit and retain, but importantly, and the number one subject these CEOs have discussed is, if you can't have the people that help you when you're sick, teach your children, respond to fires, respond to natural and unnatural disasters, and by that I mean law enforcement officers, firefighters, teachers, nurses, you don't have the fabric of a community. And if you don't have that kind of economic diversity and people can live where they work, you lose the vibrancy, the health of your community at large, which is very important to them. Let me give you a specific example. Of the 100 responders from one of our local utilities that does first response in case of loss of electricity and so on, 3 live within close proximity to where they actually work. The rest are over 90 minutes away. Everybody is impacted when that happens. So it's economic impact, it's social impact, it's quality of life impact, It's health, it's safety, it's an impact in every way.
Now, Jeff Bezos and Amazon are also part of your coalition, and yet many people in Seattle would say they're a big part of the problem, if not the problem. How do you balance that?
So, we have enjoyed the amazing positive success of economic development in our region. Now we know, along with that, has come some significant challenges. So what we're in the process of doing is, yes, Microsoft stepped off first and big time, and amazing credit to them. But now we're going to ask the community at large to support. We've asked our mayors to step up, and they've all volunteered to see what they can do to break down their barriers and provide incentives for middle-income housing that do not exist today. We've asked our community to support those mayors so they can get the job done. So we call it an all-hands-on-deck effort. At some point, we're going to ask anybody and everybody in the community, not just large business, but all business, not just business, but the community at large, to invest in the future of our community if we want to maintain the quality of life that brought us here or why we've stayed here.
Do you expect Amazon to play a financial part in fixing the housing issue in Seattle, similar to the commitment we've seen from Microsoft?
We're having a meeting of all of our CEOs tonight to have that discussion about how do we go about getting more people to invest along the lines of Microsoft? How do we get individual philanthropic people to invest in our community? How do we get the average citizen maybe to buy a community bond that will support middle-income housing? So again, it's not just Microsoft and Amazon. They are stepping up. They're going to be supportive. They're part of the solution, but it's everybody being part of the solution because we all want the quality of life that brought us here or kept us here.
Why have these sorts of pro-development policies been difficult to accomplish in the past? I mean, there are, I assume, a number of political and practical challenges you're going to be up against.
No question about it. We actually took a look around the world in Sydney, Australia, and London, England. They said they raised capital from the private sector, but they did not succeed in addressing middle-income housing. And the main reason they did not was because they couldn't break down some of the policy barriers or provide some economic incentives to developers and builders to get the job done. So that's why we have partnered with the public sector. We think we cannot succeed private alone or public alone, but together with the community's support, there's nothing we can't do.
All right, Governor Christine Gregoire, thank you so much for joining us. We'll be watching to see what you accomplish.
Thank you.
Still ahead, GoPro is zooming into a new opportunity. We will hear from CEO Nick Woodman on why the company is moving most of its U.S.-bound camera production out of China by this summer. That's next. This is Bloomberg. Apple released a software update for iPhones and its other devices to fix a bug that let users of its FaceTime video chat service listen in on people before they accepted or rejected the call. The software update is available for iPhones, iPads, and other devices. The bug was a black eye for Apple, which has made privacy and security key selling points for its devices. Meantime, GoPro reported a profit Wednesday and beat Wall Street sales expectations. This after the company cut costs and its action cameras sold briskly during the key holiday shopping season. In December, GoPro said it would move most of its U.S.-bound camera production out of China by the summer. GoPro CEO Nick Woodman told our Selena Wang that China is getting more expensive and the threat of tariffs was a catalyst for the decision to move production.
We're showing a lot of growth internationally, which is terrific. We're up significantly in EMEA and APAC in the fourth quarter, and I'm really excited that we showed consistent results last year. We were running a very predictable business because we returned to a product strategy and a pricing strategy we know very well. So it's great to have that predictability back in the business. And we finished the fourth quarter up 20% in terms of unit sell-through year over year. So that's terrific momentum.
But the new positioning of GoPro is that you're not trying to be relevant to everyone, but super serve that core customer. But how do you continue to monetize that same pool of people?
Well, we haven't reached everybody in the world that can benefit from a GoPro. The strategy you're referring to is customer segmentation and better understanding who in the world has a problem that GoPro can solve for them. And it's funny you call it a new strategy because it's actually our original go-to-market strategy. It's how we built the brand, it's how we built the business, serving very specific customers that would benefit from GoPro. And after going public, we adjusted our strategy a bit and tried to be more relevant to everybody. And it turns out that it's better business for us to better understand the various customer segments specifically and address their needs with specific product and marketing that resonates with them.
So in December, GoPro said it'd be moving U.S.-bound camera production out of China to avoid any potential tariffs. Why did you choose Mexico as the new location?
For several reasons. There's some cost benefits to moving some of our production to Mexico. There's supply chain benefits, and it just makes a lot of sense for many reasons. And while tariffs, the threat of tariffs, we haven't been included on a list, but while the threat of tariffs served as a catalyst to get us thinking about moving production out of China, once we did our homework, it just made a lot of sense on many levels. It's just smart business. So tariffs or no tariffs, we're moving our U.S.-bound production to Guadalajara.
But walk me through how these cost savings work. Without the tariffs, why exactly is it cheaper to be in Mexico versus China?
Because China's getting more expensive to do business in.
Is this something you would have considered without the threat of tariffs?
I think we would have eventually gotten there, but not as quickly as we have.
What other countries were in consideration?
Malaysia was a consideration, but at the end of the day, Mexico's got terrific infrastructure, and for our business in the Americas, it makes a lot of sense. So we decided to move to Mexico.
So camera sales in the Asia-Pacific region have been growing quite significantly, but can you talk about the China demand as a result of some of the macroeconomic headwinds?
China was more challenging last year, but we still managed to grow 2%, which is great. It's a big opportunity for us in China. China is an expensive place to do business, and it's great to see GoPro thriving there. It shows that our go-to-market strategy and global demand for GoPro extends into the Chinese market, so there's obviously a lot of opportunity for us there.
Is that a market you're going to continue to invest and double down in from a marketing perspective?
Yeah, we have sales and marketing offices in China and operations as well. It's an important hub for us.
So several of GoPro's efforts to diversify beyond action cameras have struggled, including the drone business, the media and entertainment one, but the software business seems to be taking off with the Cloud Plus subscription. So what exactly is the roadmap for growing that software revenue?
Well, GoPro serves as a solution for people that want to capture and share experiences. And that starts with the camera. But then we also need to solve for helping people offload their footage, archive it, access it, get more out of it. GoPro Plus offers unlimited cloud storage of photo and video content for our customers. It also offers you break it, we replace it, damage guarantee. GoPros are used during activities that could otherwise, damage other consumer electronics. So we want to guarantee our products for our customers, and we'll be rolling out other features and benefits that excite our customers. And for $4.99 a month, Plus offers a lot of value, and we're seeing strong interest, and we're intending to build on that this year.
And this is an exciting area for investors. You get higher margins on that software side versus the hardware side of the business. So looking out into the future, 3 to 5 years, what proportion of revenue could software subscription services become?
It can have a meaningful impact on our gross margin, that's for sure. We're already starting to see that, which is terrific. We talked a bit about that on the call yesterday. We've got some work to do to drive awareness of Plus. As we've shared previously, awareness of our cloud subscription offering is roughly 20-25% amongst our community. So there's a lot of opportunity there, a lot of work to do. And we've also been doing research to understand what our customers want to see from the Plus subscription. And we rolled out on January 30th unlimited cloud storage and increased discounts at GoPro.com to serve as a bit of a loyalty program for our customers. And we've seen a nice uptick in subscriptions since then. So more planned for this year.
GoPro CEO Nick Woodman there with our own Selena Wang. And that does it for this edition of Bloomberg Technology Friday Show. We will speak to the person with the power to possibly kill Amazon's HQ2 plans in New York City. New York State Senator Michael Gianaris will be joining the show. We are live streaming on Twitter. You can check us out at Technology. I am Emily Chang. This is Bloomberg.